Hello everyone, hope you've been well. Welcome back to the channel. Today we've got another portfolio update for you, and there's been quite a couple trades since the last update. Some are some top-ups, and I've also got some sells in there with some positions being closed and some increases in some existing positions and new positions. After the update, I'll talk a little bit about the recent Bitcoin craze and what I'm doing with Bitcoin. Here you can see the performance of the portfolio every time I've done a portfolio update. As promised, I'm hoping to do them every couple weeks, but sometimes if there's a lot happening in a week, I might do a quicker post. So far, the trend on my portfolio is on the increase with an upwards to the right trajectory. That's not too surprising as a whole, since the market has basically been increasing since I started this video series. You can see from the very first update till now, you're looking at roughly a $3,500 increase in raw numbers for since, like I said, just under a month, and that's roughly a 4% gain. On the Canadian side, you can also see an increase, although obviously not all of this was an increase in the portfolio. There was a $6,000 contribution done around December 24th or before the 24th to really bump up that Canadian portfolio a little bit. If looking at the raw numbers, you're looking at roughly a $600 increase, which translates to roughly 6.7% of the portfolio. So the Canadian portfolio is actually performing a little bit better right now. But the numbers are pretty small on the Canadian portfolio side, so expected that when I'm comparing percentages, just due to it being a smaller number, you can see some greater percentage increases on the Canadian side. For the graph, on the Canadian side, you can see how it's going up and to the right. Like I mentioned, this large steep line is of course because of it includes the contribution that I made earlier on. And as long as it's continuing to go up and to the right, then I am pretty happy. Same thing, the graph of the US one for the portfolio. This one actually looks a little steeper because you can see the numbers here between 86,000 and 79,000. There's not as much room, so when this is growing purely just from raw numbers, it's looking pretty steep. But this should definitely normalize over the long term. I'm sure by the time I hit the 6-month or 1-year update on these, if I'm still doing them every couple weeks, then they should start to normalize out and you can see something more along the lines of this. Ideally, of course, it'd be great if it could steadily go up and to the right, but I'm sure since it's the stock market, it'll have its ups and downs throughout the year. So as for my actual portfolio changes and updates, I'll go over that with you here. On the blue chip side of my portfolio, I've sold out of my positions in both Honeywell and Danaher, which I don't know why it doesn't show up here, but it's definitely a stock I had before. Both of these were more along the lines of conglomerates as to what they did, so they had their hand in a little bit of everything. For example, Honeywell tackled mostly in aerospace, cybersecurity, industrial, and manufacturing. Danaher was also a conglomerate and was operating in the general industrial space, but also delved more specifically into the medical markets with general commercial products and services. If we go to their website, you can see here, this is Honeywell. Their main things are the aerospace and cybersecurity. They've also got a podcast, which I actually haven't listened to, but if you want to, by all means. And then, of course, we've got Danaher over here, and the main industries that they've got, you can see diagnostics, commercial, general industrial goods, and the biomedical space. To be clear, I actually like the spaces that both of these companies operate in. For Honeywell, cybersecurity is a space that I think has extreme potential long-term as technology continues to advance and everything starts moving towards the cloud. Cloud businesses are absolutely booming and continue to boom right now. And even in a recession, companies are really never going to be cutting back the budget on their cybersecurity, as keeping client information confidential and secure is pretty paramount to their reputation and their livelihood. So I really love cybersecurity. And for me, I'll be digging into my own personal cybersecurity stocks to purchase. So that's the way I'll go about it. I do already have one in CrowdStrike, which is in the growth portfolio, and it's performed pretty well so far. For Danaher, I love that they're in the medical space, which is another huge booming area right now, and I think money is really going towards that space in the upcoming year. A lot of biotech companies right now are the absolute craze, which is evidenced by Kathy Wood's ARK investing firm. She's got an active ETF portfolio that she manages, and the performance over the last 3 to 5 years has been great, and specifically the last year in 2020 has been absolutely special. This is her active ETF that I just mentioned from ARK Investing. So right now it's currently $142.48 per share for the entire ETF if you were to buy into it. But this is the 1-day performance. You can see the 5-day performance. Even just 5 days ago, it was at $126. Now it's trading at $142. If you look at the last month, it was roughly about the same. You can see with her portfolio, it does go up and down quite a bit. But if we really pull it back to the 6 months or even the 1 year, you can see just a year ago, this was at $53 a share. Now we're at $142. You're looking at close to 300% returns over the past year. And the money that's been getting pushed into this fund, as well as other biotech firms, has been going tenfold. If you look at the last 5 years, about $17.32 back in January 2016. So you're getting close to 8 to 10-fold of your money if you had purchased this just 5 years ago. Now, is it a bubble? Is that space getting inflated? It's tough to say. It's certainly what these companies are doing with regards to genome editing are extremely interesting. And if successful, I'm sure will be the way of the future. But there's no way to really know right now. One thing to keep in mind if this is a fund that you would like to get into because you're seeing such tremendous performance, and to be clear, over the past year, this particular fund or ARK investing company as a general, they were the best performing company in all of 2020 when it came to active ETFs. If you were to get into this fund, I would just say be ready to ride out the highs as well as the lows, because if you're getting in now, there's obviously that adage buy low, sell high. A lot of people, they want to get into it because they see the awesome uptick and they think it's doing great, which it definitely is. But just be ready if that there is a downturn in the market or in the fund that you are riding it out, because otherwise what you're doing is the classic buy high, sell low. For my growth portfolio, I've added a couple names on here. Appian, Autodesk, and Fiverr. You can see here a bit of my best performers over the last couple weeks. TSM, or Taiwan Semiconductor, they've been growing very well over the last couple weeks. Lemonade has had quite a large jump as far as price as well. You can actually see in terms of percentage increase, my cost per share is only about $107, but the current price is about $160. So over the last couple weeks, we've seen close to almost a 60% increase in this stock. I covered it a little bit when I went over my first portfolio update. So if you want, you can go learn a little bit more about that company by watching that video. As such, I've definitely topped it up. Now, I do think that the recent increase has been a little bit too quick. So I wouldn't be surprised to see this number, this 160, kind of pull back down to maybe back into the 130s, but certainly happy to see it going up with all that momentum. Now, going over the new additions, Appian. Appian's a cloud computing company focused on what they call low-code automation. Their low-code automation platform is really what is the bread and butter of their business. So essentially what that means is this is a company that focuses on taking old legacy applications and modernizing them using their proprietary software to bring it into the 21st century. So instead of companies having to spend countless hours hiring coders and having them write out the new code and test the software, they can basically use Appian software directly. And the big benefit is when they build using Appian software, it also automatically enables the application to work on mobile. So both iOS and Android are standard. There's no extra cost, no extra computing time or resources that they need to spend. You can see here, 22 systems consolidated into one service. They're very good when it comes to increasing basically the operations and logistics of a company through using this cloud software. Now, basically, as I mentioned, I do believe that cloud computing is in the future of most companies, and Appian had absolutely stellar results throughout 2020. So I believe they'll continue to be a good hold over the next 5 years, at least. If we move on, the other one I talked about was Autodesk. Autodesk is actually probably a company that I'll end up moving over to the blue chip because it's actually so well known and it's been, operating and publicly traded for so long. So Autodesk, if you aren't familiar, they're basically a leader in computer-aided design software, and they've been that for decades. Their most well-known product that most people are familiar with is probably the AutoCAD. AutoCAD is a program basically where people can design or drop designs for whatever they want to produce. So they can image or blueprint out of designs before putting it into action. Now, what's exciting about about Autodesk as a company, they've been moving most of their consumers into a SaaS model or a software as a service model, which is awesome because this allows investors to see, the steady, visible revenue stream, and for the benefit of the company, it also usually increases margins, which is great also from, an investor perspective. Now, the switch to this type of model can be painful, but the company's been operating so well for so long that I don't see execution risk as really being a risk here. A company that has done this very well over the last few years has been Adobe, and their stock price, that is, has really appreciated due to the successful transition into this model. What's really exciting actually about Autodesk is this new product that they're rolling out, or I wouldn't say new, but this new product that's really taking traction, which is this Fusion 360. And this is basically taking, the major competitive advantages of Autodesk and putting it into one application or program that, people can sign up for. And the benefit of this is you can do a 1-year free trial for personal use, and for consumers, this $645 is actually quite a low annual fee when compared to other companies. So this Fusion 360 program has been growing when it comes to tracking the user base. I believe there, in the first quarter of last year and throughout the year, they were growing at 10,000 or 20,000 users every quarter, which is very significant, especially when you consider the fact that it's going to be annually reoccurring every single year. So like I said, I will probably end up changing Autodesk to part of the blue chip when I do my next portfolio update. And other notable mentions, Pinterest, I topped up a little bit more because I do really believe in the long-term strength of this company. Generac Holding has also performed pretty well over the last few weeks, mostly because this is a company that specializes in renewable energy, and with the Georgia Senate results, if you aren't aware, the Democrats won both seats in the Senate, which now basically allows the Democrats and President-elect Biden to push through many of the changes that he wanted to do or promised on his campaign. Renewable energy being one of the main ones that he talked about. So lastly, we've got the coin flip. I haven't actually done too much to here. I've added a company called Fubo TV, which basically does sports streaming. As people cut the cord a little bit more, I think that streaming television will continue to grow. And the interesting or benefit that I think that they will experience is Fubo TV is also getting into sports betting, and having a service where they're streaming or focus streaming on sports as well as having sports betting, I think meshes really well. So they'll be able to get revenue from both sides, and sports betting is really increasing from a market perspective. Add a little bit more to Fulgent Genetics. They've been going up quite a bit. Their performance on Friday was actually quite terrible. They dropped about 13%, but even then they're still up over 20% since purchasing. Encino, I did a deep dive on, and Outside Medical, Palantir, Zora. Those are the other ones that haven't really changed. So all in all, every portfolio is actually up. And oh, sorry, there is also the Canadian portfolio. I've made 0 changes to the Canadian portfolio since the last update. But as you can see, the market value on each of these compared to my cost is all green, and they've all been increasing. So that is always a good thing. The most increase has been from mostly the growth portfolio, as you would expect, considering it's a growth portfolio. Now, to talk about the craze that is Bitcoin. Why is everyone starting to talk about Bitcoin again? Well, you might remember the last time Bitcoin was making headline after headline was back in 2018, just a couple years ago. If we go here and pull it up on the chart, you can see 2018 right there. And within the span of just a year, you can see how in 2017, it was around $911, and it went up to 19,000 in roughly a year, or 15 months if you start pulling back a little further or pushing ahead a little more. You're looking at almost a 20x or 20 times return in just a year. So basically, if you invested $1,000 randomly in 2017 at the beginning of the year, that would have turned into $20,000 by the beginning of next year. Talk about a crazy return. And if you pull it back another year, or push it forward, if you had started at the peak here around 19,000, 1 year later, you're looking at $3,500. So obviously that is a significant decrease. You lost about 80% of your portfolio in that time. So clearly this is a very speculative thing, not quite what people would call an investment. But if we go all the way now to 2020 as to why it's making headlines again, you can see at the beginning of the year, we started at around $7,500, give or take, maybe $8,000. And just recently, as recent as probably about a week ago or a couple days ago, this was up at almost $41,000. So you're looking at, once again, an incredibly meteoric rise in Bitcoin. If we track the movements here, you can see, frequent dips of a couple $1,000s is actually very, very common for this trade. And so, people who are in this type of investment, I would really hope that they are riding it out, because if you're seeing Bitcoin drop $3,000 when you look at it the next day after you've purchased it, you've really got to be ready for the ride. And I'm sure if I zoom in, actually, it'll... Oh, no, it's still on the week-to-week view. Interval, if we go to, let's say, daily. Every single day you can see the ups and downs are just crazy. And if we move it around, every single day it seems like it really kind of moves at least, a couple thousand or $1,000 or so. So you've got to be in it for either the long haul, or you've got to treat it as very much a speculative type of trade where there's really no fundamentals or anything to look at. You're kind of just treating it like a lottery ticket. Now, I thought what's really interesting is a company like JP Morgan. If we look at their track record of what they think about this stock. This is CEO of JP Morgan, Jamie Dimon, talking about Bitcoin back in 2017.
I could care less what Bitcoin trades for, how it trades, why it trades, who trades it. If you're stupid enough to buy it, you'll pay the price for it one day. I've also told people that it can trade at $100,000 before it trades to zero. Tulip bulbs traded for $75,000 once, something like that. The only value of a Bitcoin is what the other guy will pay for it. And I think, honestly, I think there's a good chance that Bitcoin, a lot of the buyers out there are up there jazzing it up every day, so that maybe you'll buy it too and take them out.
So that's Jamie Dimon's opinion about Bitcoin. Like I said, back in 2017, clearly he has the opinion that it's really not an asset that you should be trading. He mentioned the tulip craze, which back in historical days, the price of tulips also skyrocketed like crazy, because just purely due to supply and demand, and everyone seemed to want it. So the price of tulips skyrocketed about 10x or 50x, and it came crashing right back down once people realized that tulips by themselves really have no value, except for that it was nice to look at. And so Jamie Dimon seems to have taken a very similar stance when it comes to Bitcoin. There's no actual value behind Bitcoin except for maybe the blockchain technology behind it, which he does acknowledge in an earlier part of this interview. But as far as Bitcoin itself, you can see kind of what his opinions on it were. Now, why is that interesting? Well, JP Morgan recently came out with an evaluation of Bitcoin in 2020. So let's take a look at that. So interestingly enough, JP Morgan came out with this analysis just a few days ago talking about how Bitcoin could hit $146,000. Right there. Says essentially what they took a look at was the market cap of Bitcoin and the market cap of gold. And they basically said if you start to equalize these two, since they're both, assets that people fly to when it comes to risk and inflation, then you would see Bitcoin with a price of $146,000 to equal that market cap of gold. So looking down on this article here, you can see their analysis really here. The analysts point to outflow from gold-pegged exchange-traded funds or ETFs and inflows into a digital currency-focused trust sponsored by Grayscale. And as you can see, this figure here really kind of talks about how people are moving their money. So in this line here, the black line, you've got the gold. You can see how it's growing, obviously, but you can see here where it starts to dip, kind of starting in the last quarter or last 2 quarters of 2020. If you view Bitcoin in the same, it's got a slow, steady rise as people start to buy more and more into it. But then you've got this meteoric rise, which is also, of course, responsible for the meteoric rise of the Bitcoin price, supply and demand, right? Now, of course, as we talked about earlier, there's a lot of risk. JP Morgan says that Bitcoin probably has about 3.4 times more risk than gold and over 5 times if you're using specifically this Grayscale Bitcoin ETF. But of course, with risk, comes reward. And as for their analysis, they basically wrote, there is little doubt that this competition with gold as an alternative currency will continue over the coming years, given that millennials will become, over time, a more important component of investors' universe and given their preference for digital gold over traditional gold. Basically, what they're saying is the younger generation, they're obviously more likely to adopt this as they're more tech savvy. And so if they start to prefer this digital gold, quote unquote, which is referring to Bitcoin, then you're going to see the demand of Bitcoin really start to rise. Now, what's really helped us out actually is you've got large companies like PayPal and Square. They're actually allowing people to purchase on their platforms with Bitcoin. This started happening in 2020. So PayPal recently allowed users on its platform to purchase Bitcoin as well as other sister cryptos like Ethereum's Ethercoins, Bitcoin Cash, and Litecoin. And Square, another fintech company that's huge in the payment space, their Cash App also allows users to buy and sell Bitcoins. So as the main market and big players really start to make Bitcoin more accessible, I can see Bitcoin demand really rising. Now, as for me, what I am doing with Bitcoin, I don't own very much of Bitcoin. At the time of this, it probably makes up about 2.5 to 3% of my portfolio. But really, I only went in, starting a position with 1% of my portfolio. The crazy rise has kind of allowed it to start growing as far as a percentage of my net worth in my portfolio, up to about 2.5 to 3%. But my long-term outlook on this is that it's purely a speculative investment. It's not something that I'm really going to ever fully understand because it's, in my opinion, the main value of this is the blockchain technology behind Bitcoin. Bitcoin itself is purely just being driven up from a scarcity of price, so just too much demand and limited supply. So when companies like the U.S. government and government economies around the world are printing money, it's making fiat currency much cheaper or less valuable. So when you've got a limited asset like Bitcoin, where they say there's only going to be 21 million Bitcoins ever, that'll drive up the price. But is there any actual value in Bitcoin like there is in gold? Can you do anything with Bitcoin on its own? No, not really. So for me, it's a speculative investment. It's purely a lotto ticket or a gamble. If I lose that 1% of my portfolio, am I going to lose sleep? No. So if it drops to $10 the next day, will it hurt? Of course, but it's money that I can afford to lose, so I'm not very worried about it. If it does really, take off and hits $146,000 like JP Morgan says it could, then that is my lottery ticket. All right, everyone. Well, thank you for watching another portfolio update. You can let me know in the comments down below if maybe you're going to get into Bitcoin or what you guys think of Bitcoin, what it might do in the future. As always, like, comment, and subscribe, and we'll chat with you next time. Thanks.